Pre-IPO Institutional Research Report. BW Industrial Holdings, Inc., a small Houston EPC firm's long, bumpy road to the public market.
Section 1. Executive Summary. BW Industrial Holdings, Inc. is a small, Houston, Texas-based engineering, procurement, and construction company that has been attempting to complete a U.S. initial public offering since filing its first Form S-1 with the SEC in late 2025. As of this report's date, the offering status is genuinely uncertain. The company's targeted listing date has already slipped multiple times, from an initial window around March 20, 2026, to May 18, 2026, to May 27, 2026, and available sources reviewed for this report do not confirm that the offering has actually priced or that shares have begun trading as of late July 2026. Prediction markets tracking the deal assigned roughly 93 to 97.5% probability as of May 2026 that the IPO would not close even by the end of that month, reflecting persistent investor skepticism. In plain terms, BW Industrial designs and builds specialized industrial facilities, the kind of large manufacturing plants used for semiconductor fabrication, battery production, solar panel manufacturing, and automotive parts, primarily for international and specifically Chinese companies setting up factories in the United States. It's a real revenue-generating business, but a very small and highly volatile one. Full year 2024 revenue reached $102.0 million, plus 251% year-over-year, driven substantially by a single large solar manufacturing project. But that project was terminated, and revenue for the first 9 months of 2025 collapsed 70% year-over-year to just $19.9 million. The proposed offering itself is tiny by NASDAQ and NYSE American standards, 2,625,000 shares at a most recently disclosed range of $6 to $7, targeting roughly $17 million of gross proceeds. Founder and CEO Yunlong Zhang would retain approximately 57% of voting power following the offering, making BW Industrial a controlled company, with correspondingly reduced public shareholder governance protections. Key facts at a glance. Business: EPC services for advanced manufacturing facilities. Target customers: primarily international, especially Chinese manufacturers setting up factories in the U.S. Full year 2024 revenue, $102.0 million, plus 251% year-over-year, heavily concentrated in one solar project client. 9-month 2025 revenue, $19.9 million, minus 70% year-over-year, following termination of that key project. Customer concentration: one client equals 96% of 2023 revenue. One project equals 78% of 2024 revenue. Two clients equals approximately 83% of the most recent disclosed period. Proposed offering: 2,625,000 shares at $6 to $7, most recent disclosed range, approximately $17 million of gross proceeds. Governance: controlled company, CEO Yunlong Zhang to hold approximately 57% of voting power.
Section 2. Investment Thesis. The bull case for BW Industrial is a bet on a specific real macro trend, the ongoing wave of foreign direct investment into U.S. manufacturing capacity, particularly from companies, many linked to China, building semiconductor, battery, solar, and automotive parts facilities on U.S. soil in response to trade policy, supply chain diversification, and industrial policy incentives. BW Industrial has built genuine, demonstrated expertise navigating the specific regulatory and technical requirements these international clients need, evidenced by real, completed projects and a 251% revenue surge in 2024. If the company can successfully diversify its client base, as it claims to be doing, growing from 6 clients in early 2024 to 13 in early 2025, it could plausibly build a much steadier, larger business over time. The bear case is stark and well documented in the company's own filings. This is a business where a single client or project can represent the overwhelming majority of revenue in any given year, 96% in 2023, 78% in 2024, and where the loss of one contract caused a 70% revenue collapse within 9 months. Layer on top of that a controlled company governance structure giving the founder-CEO 57% of voting power, a proposed valuation that independent analysts have called rich relative to the business's volatility, and, perhaps most tellingly, an offering that has already slipped past multiple targeted listing dates without confirmed completion. This is about as small and as risky as a public market offering gets. Thesis in one sentence. BW Industrial offers thematic exposure to U.S. reshoring and foreign direct investment in advanced manufacturing construction, but it is an extremely small, single-client-dependent, founder-controlled company whose own IPO has struggled repeatedly to reach the finish line, and investors should treat any expected listing date with real skepticism until confirmed.
Section 3. Company Overview. Legal Entity. BW Industrial Holdings, Inc., Delaware Corporation. Headquarters, Houston, Texas. Proposed ticker, BWGC. Year founded, November 2016. Founder, CEO, and Director, Yunlong Zhang. Chief Financial Officer, Zimin Chen, joined 2019. Employees, 18 full-time employees as of the prospectus date. Governance status, controlled company under NASDAQ NYSE American rules, CEO to hold approximately 57% voting power. Jobs Act status, emerging growth company electing reduced public company reporting requirements. Corporate timeline and IPO process. Date, milestone. November 2016, company founded by Yunlong Zhang. 2023, single client represents 96% of full-year revenue, extreme concentration in the company's early growth phase. 2024, revenue surges 251% to $102.0 million, driven substantially by a large solar manufacturing project, the Solar Agreement, representing 78% of the year's revenue. December 2025, publicly files initial S-1 with the SEC, targeting up to $21 million at a $7 to $9 price range. January 2026, Seeking Alpha and other independent analysts publish cautious hold assessments, citing valuation and revenue volatility concerns. March 16, 2026, files S1/A, lowering the price range to $6 to $7 and reducing the targeted raise to approximately $17 million. Reserves ticker BWGC on NYSE American, specifically in this filing version. Targeted March 20, 2026, first targeted listing date passes without confirmed completion per sources reviewed for this report. Targeted May 18th and May 27th, 2026. Subsequent targeted listing dates, cited by multiple data aggregators, also pass without confirmed completion per sources reviewed for this report. As of July 27, 2026, no source reviewed for this report confirms the offering has priced or that BWGC shares have commenced public trading.
Section 4. Business Model. BW Industrial operates a classic project-based EPC, engineering, procurement, and construction business model. Clients, typically manufacturers building a new factory or expanding an existing one, hire BW Industrial to design the facility's specialized process systems, procure the necessary equipment and materials, and manage or perform the physical construction and integration work. Revenue is recognized as individual projects progress, meaning the company's financial results are inherently lumpy, swinging significantly based on how many large projects are active and at what stage in any given quarter or year, a structural characteristic clearly visible in the company's own revenue history. A specific and important part of BW Industrial's positioning is its focus on international clients, particularly companies from China and elsewhere in Asia, looking to establish manufacturing operations in the U.S. The company argues this focus has given it specialized expertise in navigating both the regulatory requirements of U.S. industrial construction and the particular technical and communication needs of the international companies it serves, a niche the company believes larger, more generalist EPC firms are less well-positioned to serve as effectively. More recently, the company has also begun exploring product diversification, developing modular water treatment systems targeting commercial and governmental customers in North America, Central America, and South America, with pilot deployments and potential first commercial sales targeted for the first half of 2026. An early-stage initiative intended to reduce the company's dependence on large individual construction projects over time. How to think about it? Think of BW Industrial as a specialized general contractor for very technical factories, semiconductor plants, battery plants, solar panel plants, with a particular niche serving foreign companies building their first U.S. facility. Because it typically works on a small number of large projects at any given time, losing just one client can swing total revenue dramatically, which is exactly what happened between 2024 and 2025.
Section 5. Products and Services. Core EPC Services. BW Industrial provides design, construction, and integration services for critical process systems across several industrial sectors: automotive parts manufacturing, energy and battery manufacturing, renewable energy infrastructure, notably solar photovoltaic manufacturing, electronics production, advanced manufacturing more broadly, and semiconductor fabrication. Disclosed current and recent projects include a large semiconductor manufacturing facility in Phoenix, Arizona, and photovoltaic manufacturing facilities in both Florida and Arizona. Modular water treatment systems, new product line. Separately from its core project-based EPC work, BW Industrial has been developing a line of modular water treatment systems, targeting both commercial customers and government agencies across North, Central, and South America. This represents an attempt to build a more repeatable, potentially higher-margin product business alongside the company's inherently lumpy, large project-dependent construction services. Though, as of the company's most recent public disclosures, this product line remained pre-commercial, with pilot deployments and first sales targeted for the first half of 2026. Government sector expansion. The company has also disclosed that it meets eligibility requirements to bid on government construction projects in Texas and has dedicated personnel pursuing such opportunities on an ongoing basis, part of a broader stated strategy to diversify its client base beyond the small number of large private international manufacturers that have historically dominated its revenue. How to think about it? The core business is Build Me a Factory, specialized for extremely technical facilities. The water treatment product line and government bidding push both represent early, unproven attempts to add more predictable revenue streams on top of a historically boom-or-bust project business. Section 06. Industry Overview. The U.S. industrial construction and EPC sector has benefited in recent years from a sustained wave of manufacturing reshoring and foreign direct investment, driven by a combination of trade policy, supply chain diversification following pandemic-era disruptions, and targeted industrial policy incentives, including for semiconductor and battery manufacturing specifically. BW Industrial's own investor materials, citing third-party research from Frost & Sullivan, point to growth in the market for industrial construction works initiated or funded by Chinese firms in the United States as a specific tailwind relevant to its niche positioning.
That said, the broader EPC industry is intensely competitive and dominated by considerably larger, more established players with far greater project execution scale, balance sheet strength, and existing client relationships than a company of BW Industrial's size, 18 employees, low double-digit millions of annual revenue in its most recent disclosed period. The industry is also inherently cyclical, tied closely to capital expenditure cycles, commodity prices, and manufacturing investment trends, all factors well outside any individual EPC firm's control.
Section 07. Market Opportunity and Offering Status. BW Industrial's core market opportunity is straightforward. Continue winning EPC contracts from the ongoing wave of international manufacturing investment into the United States, while diversifying beyond its historical reliance on one or two dominant clients per year. The company's stated strategy explicitly targets this diversification, expanding from 6 clients in early 2024 to 13 in early 2025, alongside entry into the modular water treatment product line and pursuit of government sector contracts, both discussed in Section 05. Offering detail. Most recently disclosed terms. Shares offered: 2,625,000 shares of common stock. Price range: $6 to $7, lowered from an initial $7 to $9 range. Target gross proceeds: $17 million, lowered from an initial $21 million target. Over-allotment option: up to 393,750 additional shares, 15% of the base offering. Pre-offering shares outstanding: 19.4 million. Post-offering shares outstanding: 22.0 million per third-party data aggregators. Exchange: changed during the process. The company's original December 2025 Form S-1 targeted the NASDAQ global market, while its March 16, 2026 Form S-1A instead names NYSE American, a genuine shift in listing venue, not merely an aggregator error. Readers should verify the final listing venue directly via the most recent SEC filing before the offering closes. A listing timeline. Repeated delays, status unconfirmed. This offering has now missed at least 3 publicly reported target dates, approximately March 20, May 18, and May 27, 2026, without confirmation in the sources reviewed for this report that pricing or trading has actually occurred. A prediction market tracking the deal's closing assigned the outcome no IPO before June 2026, a roughly 93 to 97.5% probability as of May 2026. Notably, the company continued actively marketing the offering into at least the spring of 2026, filing a free writing prospectus containing full audited fiscal year 25 results, a filing that would only be prepared for an active, ongoing offering process, indicating the deal had not yet been withdrawn as of that point, even though it had not yet priced. As of July 25, 2026, this report cannot confirm whether BW Industrials has since completed its IPO, remains pending under further revised terms, or ultimately been withdrawn. Readers should check SEC EDGAR directly for the most recent filing, S1/A 424B4, or a withdrawal notice before relying on any specific status. Competitive landscape. BW Industrial competes in the broader U.S. industrial and advanced manufacturing EPC market against a wide range of firms, from large, diversified global engineering and construction companies to smaller, regionally focused specialists. The company's own disclosures acknowledge that competition from larger, more entrenched EPC firms with greater financial resources, broader geographic reach, and longer track records represents a key ongoing risk to its ability to win new business, particularly against competitors better resourced to bid on the largest, most complex advanced manufacturing projects, such as major semiconductor fabrication facilities. Specific named public competitors. Information not publicly available in the sources reviewed for this report. BW Industrial's disclosures describe its competitive set in general terms, larger established EPC firms, rather than naming specific public comparables.
Given BW Industrial's small scale, 18 employees, low double-digit millions of recent annual revenue, it is best understood as a niche, specialized player competing for a specific subset of projects, those involving international and particularly Chinese manufacturers, rather than a broad-based competitor to the largest global EPC contractors. Where BW Industrial stands. The company's stated differentiation is its specific expertise navigating the regulatory, cultural, and technical requirements of international manufacturers establishing U.S. operations, a genuine niche, but one that is inherently limited by the pace of new foreign direct investment into U.S. manufacturing and by the company's own very small scale relative to the size of individual projects it pursues. Section 9. Management Team. Yunlong Zhang, Founder, Chief Executive Officer, and Director. Founded BW Industrial in November 2016 and has served as CEO and a director since. Brings more than 30 years of experience in the EPC industry, having led U.S. industrial construction projects across multiple states since 2014. Holds a B.Eng in Industrial Electrical Automation. Following the offering, Zhang is expected to retain approximately 57% of the company's voting power, making BW Industrial a controlled company under applicable exchange rules, a structure that provides operational continuity but concentrates decision-making authority with limited independent board oversight. Jimin Chen, Chief Financial Officer. Joined the company in 2019. Brings experience in financial reporting, budgeting, and internal controls, with prior roles in assurance, audit, and banking. Holds an MBA from Rice University and a Master of Accounting and BS in Accounting from the University of Arizona. Robert A. Sleva, P.E., Chief Operating Officer and Director Nominee. More than 30 years of experience in industrial operations and engineering. Previously served as President/COO of a separately listed industrial group, alongside leadership roles across the energy and industrial services sectors. Independent Director Nominees. Yuan Shi. More than 2 decades of experience in industrial technology and manufacturing management. Previously Managing Director and Board Member of Shanghai North Glass Coating Technology Industrial Corporation Limited. Holds a master's degree in mechanical engineering from Tongji University, Shanghai. Mark DiStefano. More than 10 years of experience in executive leadership, operations management, and industrial services. Has served as General Manager of Houston Placement Area LLC and previously held executive roles at Rocca Solutions Group and Arena Industrial. Holds degrees from the United States Military Academy, the University of Texas, and the University of Houston. Section 10. Financial Performance. Metric. FY 2023, FY 2024, FY 2025. Revenue. Approximately $29.1 million, $102.0 million, plus 251% year-over-year. Approximately $22.5 million, minus 78% year-over-year. Net income, approximately $4.1 million, approximately $7.5 million, approximately $4.9 million. Customer concentration, 1 client equals 96% of revenue. 1 project, solar agreement, equals 78% of revenue. 2 clients equals 83% of revenue. Client count early each year, 6 clients early 2024, 13 clients early 2025. In plain terms, BW Industrial's revenue history is a textbook example of project-based, customer-concentrated business risk. The 251% revenue surge in 2024 sounds impressive in isolation, but it was driven overwhelmingly by a single large solar manufacturing contract, the solar agreement, which represented 78% of that year's total revenue. According to the company's own free-writing prospectus, full-year 2025 revenue fell 78% to approximately $22.5 million, which management attributes to two factors: the completion of several large EPC projects that had driven the outsized 2024 figure, and delays on newly signed 2025 contracts that pushed revenue recognition into 2026. Despite the steep revenue decline, the company remained net income positive in every disclosed year, 2023 to 2025, though net income of approximately $4.9 million was down from approximately $7.5 million in 2024.
Section 11. Detailed Analysis. Most recently disclosed financials. Because BW Industrials has not yet completed its IPO and does not yet file standalone quarterly reports 10Q as a public company, this section is based on the most recent financial disclosures included in the company's S1/A registration statement, covering the 9 months ended approximately September 30, 2025, compared to the equivalent prior year period. Revenue. Revenue for the first 9 months of 2025 was $19.9 million, down 70% from $66.3 million in the same period of 2024. As detailed in Section 10, this decline is directly attributable to the termination of a single large solar manufacturing project that had represented 78% of full year 2024. Gross margin. Independent analysis, Seeking Alpha, notes that gross profit has risen as revenue has fallen, implying an improving gross margin percentage in the most recent period, but also characterizes overall margins as erratic, consistent with a business where the specific mix of active projects, each with its own cost structure and profitability, can swing reported profitability significantly from period to period. A precise, standardized gross margin percentage for the most recent period, information not publicly available in the sources reviewed for this report. Readers should consult the complete audited and unaudited financial statements in the company's most recent S1/A on SEC EDGAR for this detail. Cash flow. Independent analysis, Seeking Alpha, specifically flags negative cash flow from operations in the company's most recent disclosed period, a concerning signal when combined with the sharp revenue decline, suggesting the business was spending more cash than it generated from operations, even before accounting for any IPO-related costs. Balance sheet. Detailed balance sheet figures, cash, debt, total assets/liabilities as of the most recent disclosed period, information not publicly available in the sources reviewed for this report. Readers should consult the complete S1/A financial statements on SEC EDGAR. Guidance. As a pre-IPO emerging growth company, BW Industrials has not issued formal forward financial guidance. The company's disclosed forward-looking strategic priorities center on client-based diversification, expanding beyond its historical 1 or 2 client concentration, the planned first half 2026 commercial launch of its modular water treatment product line, and expanded pursuit of government sector contracts in Texas. Management commentary. Company disclosures state management's belief that its deep expertise navigating complex regulatory frameworks, international business practices, and the technical requirements of sophisticated manufacturing processes, built through years of service to international clients, is now being leveraged to pursue a broader domestic client base and public sector opportunities, explicitly framed as a strategy to reduce customer concentration risk going forward. Key changes versus previous period. Revenue fell 70% year-over-year for the 9 months ended September 2025, reversing the prior year's 251% growth surge following the termination of the dominant solar agreement project. Client count nonetheless more than doubled year-over-year, 6 to 13, suggesting genuine, if still early stage, progress on customer diversification, even as aggregate revenue declined. Operating cash flow turned negative in the most recent disclosed period per independent analysis.
The company twice revised its IPO terms downward during this period, price range cut from $7 to $9 to $6 to $7, Target raise cut from about $21 million to about $17 million, consistent with the weaker recent financial trend and reported tepid investor demand. Section 12. Growth drivers. I. Continued U.S. manufacturing reshoring and foreign direct investment. Sustained investment by international, particularly Chinese manufacturers, building U.S. facilities across semiconductors, batteries, solar, and automotive parts, provides an ongoing pipeline of potential new EPC projects directly in BW Industrial's core niche. Top. Client-based diversification. Growth from 6 to 13 clients between early 2024 and early 2025, if sustained and extended, would directly address the company's single largest disclosed risk factor. Plus, module water treatment product line. A successful first-half 2026 commercial launch could provide a new, potentially more repeatable and less project-lumpy revenue stream across North, Central, and South American commercial and government customers. Top. Government contract pursuit. Established eligibility to bid on Texas government construction projects opens a new, historically untapped customer category with potentially different and less concentrated revenue characteristics than the company's private international client base. Top. Fresh IPO capital, if completed. Should the offering ultimately close, the resulting capital, targeted at roughly $17 million most recently, would support working capital, potential acquisitions, and continued expansion efforts, per company disclosures.
Section 13. Key risks. A. Extreme customer concentration. A single client or project has represented the overwhelming majority of revenue in every disclosed year to date, 96% in 2023, 78% in 2024, approximately 83% across 2 clients most recently. The loss of any one major client or project can and has caused a revenue collapse of 70% or more within months. A. Highly volatile project-based revenue. As an EPC business dependent on a small number of large projects at any given time, revenue recognition is inherently lumpy and unpredictable quarter to quarter and year to year, making the business difficult to forecast or value using conventional steady growth assumptions. A. Repeated IPO delays and unconfirmed listing status. This offering has missed at least 3 publicly disclosed target listing dates, and sources reviewed for this report could not confirm whether the IPO has priced as of late July 2026. This pattern of delay is itself a signal of underwriter or investor hesitancy that prospective investors should weigh heavily. A. Founder-controlled governance. CEO Yunlong Zhang is expected to retain approximately 57% of voting power post-offering, making BW Industrial a controlled company with reduced governance protections for public shareholders and concentrated decision-making authority in a single individual. A. Very small scale. With only 18 full-time employees and low double-digit millions of recent annual revenue, BW Industrial is a genuine microcap with limited resources to compete against larger, better-capitalized EPC firms for the largest and most complex advanced manufacturing projects. A. Negative operating cash flow. Independent analysis has flagged negative cash flow from operations in the company's most recent disclosed period, raising questions about the business's ability to self-fund growth without external capital. A. Rich valuation relative to business volatility. Independent analysts, Seeking Alpha, have specifically characterized the company's targeted valuation as high relative to its price-to-sales multiple, especially given the severe recent revenue decline and inherent unpredictability of project-based EPC revenue. A. Repeated reduced offering terms. The company has already cut both its proposed price range from $7 to $9 to $6 to $7 and target raise size from approximately $21 million to approximately $17 million once during the process, typically a signal of soft investor demand during roadshow or book building. A. Unresolved exchange listing discrepancy. Sources reviewed for this report disagree on whether BW Industrial's shares are ultimately intended to list on NYSE American or NASDAQ.
The company's own March 2026 S1/A specifies NYSE American, while some third-party aggregators reference NASDAQ. Readers should verify the final listing venue directly from the most recent SEC filing.
Section 14. Valuation. Metric. Value. Most recently disclosed price range, $6 to $7 per share. Shares offered, 2,625,000. Target gross proceeds, target $17 million. Prediction market implied market capitalization range, if completed, $140 to $155 million, most likely bucket, per Polymarket trading data as of May 2026. FY 2024 revenue, $102.0 million. 9-month 2025 revenue, $19.9 million. Valuing BW Industrials is genuinely difficult given its revenue volatility. Using FY 2024's $102.0 million revenue figure, a $140 to $155 million implied market capitalization would suggest a modest price-to-sales multiple of roughly 1.4 to 1.5x, which would look reasonable for a low-margin construction business. However, using the far more recent and arguably more representative of the company's current trajectory, 9-month 2025 revenue pace of $19.9 million, an annualized run rate closer to $26–27 million, the same implied market cap would suggest a price-to-sales multiple above 5x, a considerably richer multiple that independent analysts seeking alpha have specifically flagged as excessive given the company's demonstrated revenue instability. This dramatic swing in apparent valuation multiple, depending simply on which period's revenue is used, is itself a clear illustration of why this stock is difficult to value with any confidence. Section 15. Upcoming catalysts. Catalyst. Expected timing. Why it matters. Confirmation of IPO completion or withdrawal. Information not publicly available, status uncertain as of this report. The single most important near-term event resolves the fundamental uncertainty of whether this offering will proceed at all. New client contract announcements. Ongoing. Given the company's extreme customer concentration, any new major project win would be a meaningful, closely watched signal. Modular water treatment product commercial launch, targeted first half of 2026, would mark the company's first step toward a more diversified, less project-lumpy revenue base. Government contract wins in Texas, ongoing, would validate the company's public sector diversification strategy. First post-IPO quarterly report, if listing completes, information not publicly available, would provide the first standardized, comparable financial disclosure as a public company. Section 16. Long-term outlook. BW Industrial's long-term outlook depends almost entirely on whether it can convert its niche expertise serving international manufacturers into a genuinely diversified, repeatable business, rather than remaining dependent on winning 1 or 2 dominant contracts per year. The early signs of client base growth, 6 to 13 clients year over year, are a modestly encouraging data point, but the 70% revenue collapse following the loss of a single project demonstrates just how far the company remains from that goal today. Success in the modular water treatment product line or in government contracting could meaningfully change this picture over a multi-year horizon, but both remain unproven early-stage initiatives as of this report's date. Independent of the underlying business, the company's own struggle to complete its IPO, missing multiple targeted dates and twice cutting its offering terms, is itself a relevant data point for long-term investors. It suggests underwriters and prospective investors have found the story difficult to price confidently at the company's desired valuation, a dynamic that could persist even after or if the offering eventually closes. Section 17. Bull Case. Bull Case Summary.
The IPO ultimately completes, providing fresh capital. Client-base diversification continues at the pace seen between early 2024 and early 2025, meaningfully reducing customer concentration risk over the following 2 to 3 years. The modular water treatment product line achieves successful commercial launch in 2026, adding a new, less lumpy revenue stream. Government contract wins in Texas provide additional diversification, and the broader U.S. manufacturing reshoring trend continues, generating new EPC project opportunities for BW Industrial's specific international client niche. In this scenario, BW Industrial could grow into a steadier, more diversified small-cap EPC business over a multi-year horizon. Though even in this case, its scale would likely remain modest relative to the broader industrial construction sector. Section 18. Bear Case. Bear Case Summary. The IPO is further delayed, repriced downward again, or ultimately withdrawn altogether, consistent with the pattern already observed through mid-2026. Even if completed, the company continues to depend on 1 or 2 dominant clients per year, and the loss of any major project triggers another sharp revenue collapse similar to the 70% decline already seen in 2025. The modular water treatment and government contracting diversification efforts fail to gain meaningful traction. Negative operating cash flow persists, eventually requiring dilutive follow-on financing. And the founder-controlled governance structure limits public shareholders' ability to influence strategic decisions even as the underlying business struggles. In this scenario, BWGC, if it lists at all, could trade as a thinly followed, highly volatile microcap stock disconnected from any stable underlying earnings trend. Section 19. Final Investment Conclusion. BW Industrial Holdings represents about as small and as uncertain a public offering candidate as exists in the current market, a genuinely tiny 18-employee EPC business with real revenue and real completed projects, but with financial results that swing by 70% or more within a single year based on the fate of 1 or 2 dominant client relationships. The company's own repeated IPO delays, missing at least 3 targeted listing dates and twice cutting its offering terms, add a further unusual layer of uncertainty that goes beyond the normal risks of investing in a newly public small-cap company. For investors, the most important starting point is not analyzing the business at all, but simply confirming whether this offering has actually closed, remains pending, or has been withdrawn, a status this report could not definitively establish as of July 25, 2026, from the sources reviewed. Only once that basic question is answered does the underlying analysis of customer concentration, cash flow, and founder-controlled governance become directly actionable. Bottom line, BW Industrial Holdings offers thematic niche exposure to U.S. manufacturing reshoring, but its extreme customer concentration, negative operating cash flow, founder-controlled governance, and perhaps most notably its own unusually troubled path to actually completing an IPO, all argue for significant caution. This report does not constitute a recommendation to buy, sell, or hold BWGC shares. Readers should verify the offering's current status and review the complete most recent S1/A on SEC EDGAR and consult a qualified financial advisor before making any investment decision.